Hey everybody, it's Justin Fitzpatrick here at Keller Williams with the Fitzpatrick Real Estate Team and our number one preferred loan officer, John Jenkins, or Johnny Mortgage, as most people know him by. How you doing today, John?
I'm doing well. Good morning. Good morning.
Hey, so wanted to take this next episode and a lot of questions that I get when I'm sitting at dinner with friends. I'm sure you get some of the same questions as well, but is how to time the real estate market. Right? When is the best time to buy in 2025? And how do we make sure that we're not necessarily leaving any money on the table, but really buying at the bottom? And, this question always kind of makes me laugh just a little bit because the truthful answer is it just kind of depends, wouldn't you say?
Yeah, it really depends on a lot of factors. So yeah, there's different things that come into play on whether you're trying to time the market. I think it's a horrible idea to try to time the market, but some people are trying to time the market and wait for interest rates, and that's just not the case on what you should be doing.
Yeah, I mean, everybody sees these prices. Now, when we're talking about this, we're talking specifically DFW, not nationwide, because there are different markets. And when we do talk about real estate trends, we should become hyper local. So, in our DFW market, we're not necessarily falling like some of the other areas in the nation, but we are seeing a depreciation. And people are watching that. They're noticing homes sitting longer and prices are starting to come down. Thing that they have to understand is we can list a house for whatever we want, whatever the homeowner wants. That doesn't mean that's what it should sell for. So that could be a reason why you're seeing those prices come down as well. But in reality, we are seeing the prices come down. They're saying, okay, well, I'm just going to wait until maybe that stops. Now, I know we've got some investment properties. John, you're an investor yourself, right?
Yes.
And this same analogy would work for a first-time home buyer, but tell me, how did you know that it was a good time for you to buy your investment properties? I mean, were you ever waiting and like, well, what if the market does this? Then I'll pull the trigger on it. Or what made it right for you?
No, for my investments, what I did is just ran the numbers, right? Numbers don't lie. So I have to run the numbers, make sure it makes sense for what I'm trying to use that investment for. And it really wasn't about timing the market. It's really about does it make sense for me at that time to buy and rent them out and break even or whatever I wanted to utilize that property for. So that's kind of how I buy investments.
And so, same with a first-time home buyer or just a regular homeowner, right? All they gotta do is ask the question. If I have a certain goal, really our goal shouldn't be to time the market and make it the most advantageous bought at the bottom of the market, right? That's not our goal. Our goal is to get to the next phase of our life. And if we can make the numbers work to where that works out for us, that should be our overwhelming goal, right?
Right. Absolutely.
Um, so I wanted to kind of do a little exercise with you that I think is pretty cool. Uh,
Uh-huh.
and we'll have everybody else follow along here. But I've got my whiteboard here, okay? And I'm gonna draw a line coming down showing the depreciation in our market. And I want you to tell me when you think we're at the bottom of the market, okay?
Stop.
Okay. This is obviously not the bottom, John. What happened? You missed it.
Yes.
Right? And that's what happens. And people tend to think that when the real estate market changes, that it's just a gradual move. But really, I mean, it's like a pendulum, right? I mean, we went from selling homes $40,000 over value with low interest rates to man, the brakes stomped and we threw it right in reverse, didn't we? I mean, it happened
Right.
so fast. That doesn't necessarily mean it's a bad time to buy, but what people have to understand is that if we're trying to time the market, so this would be an indicator that probably interest rates had changed, right? Had probably come down, but they just
Right.
lost the savings of that rate because home prices are going to appreciate because we're still low on inventory. Even though I know everybody says, hey, I see a lot of houses out there for sale. When we talk a balanced market, we're still not even there yet.
Right. Right.
So we've talked about this in previous episodes. But wouldn't you say that if they could secure the asset somewhere in this area, right? Okay, we didn't hit the bottom, But now they secured the asset at a higher rate. When we do hit this interest rate shift down, and if anybody's been paying attention to the news, we are expecting that either at the tail end of this year or into next year. And they just refinance.
Right.
Now they got the best of both worlds, right?
Absolutely. You should always just secure the asset because history shows that you're not going to lose with real estate. I think out of the last 20 or 30 years, I think I sent you a diagram, but we've only went negative 3 or 4 years, and that's back in the '07 year where the financial crisis happened. So you might want to, yeah, pull up that chart right there. So as you can see, this is a chart showing that your home appreciates every year. Now, except for those 4 years, you cannot lose in real estate. And this is
And
what is
people
it?
people that may not know, what are those 4 years that we're looking at there?
That was a financial crisis where
2008, isn't it?
yeah, 2007, 2008, it started in 2007. It really hit hard 2008. It's when a lot of homes went into foreclosure. The financial world, a lot of banks closed doors. Watch The Big Short. Have you ever watched The Big Short?
I have. Yeah.
It kind of talks about it. So that's a great movie on kind of what happened during those years. Obviously, that was a long time ago, and as you can see, everything's recouped since then and really thrived over the last 10 years, as you can see. It looks like in the 1990s it was kind of low, but still not negative.
Still appreciating.
I know, still appreciated. And then these last couple of years, we've really been spoiled with the appreciation of a home. So when I say secure an asset, as an investor, I wouldn't even worry about the interest rate because I'm just trying to buy a home because I know it's going to appreciate over time.
And as an
And then,
investor, I mean, an investor also means a homeowner, right? They're investing at that time. So,
yes, same with
uh,
my house, my primary residence. I'm just trying to buy the asset and let the appreciation happen. And then I can always refinance into lower rates when that time comes or when it makes sense for me. And so that's kind of how I look at, securing the asset and growing wealth, actually.
right. And I think it's absolutely crazy that people they're afraid of 6.5 to 7% interest while they're renting something paying 100%.
Right,
They're not paying anything down,
right.
right? When they could be paying their asset down, holding it, let it appreciate. And not only is it just good being the homeowner to where you have that in your pocket, but that gives you more equity in an asset to where you can start achieving more long-term wealth for later in life, right? You have a lot
Absolutely.
more leverage, things like that that you could do. So, I almost feel like we're myth busting here. Timing the market, is it a real thing? Probably
No.
not, right? Just finding the right situation that works best for you, right?
Yeah,
So,
I tell people, just fill out an application. Let's have a consultation. Let's talk of numbers, see if it makes sense for you. I can definitely show you the upside of every secure asset buying a home. So yeah, we just need to talk to more people, I feel like, and educate more people on how building wealth like that makes sense.
yeah. And after they fill out the application, we force them in a home, right?
Yeah.
No, if it doesn't work, it doesn't work, right?
It doesn't
Help
work,
them
it doesn't.
achieve their goals, make sure they're happy moving forward. And if it doesn't work out, that we can set them up on a longer term plan to make sure that they are successful when the time is right for them.
Absolutely. Everyone deserves to be a homeowner at some point in their life. And so, like you said, we'll set them up on a plan to become a homeowner. That way they're not paying someone else's mortgage with 100% rent.
Yep. That's good stuff, John. I appreciate you jumping on today. We always try and keep these short and sweet because we know everybody's busy, but please catch us in a couple of weeks when we do our next episode. And if you like what you're seeing, please be sure to like us and subscribe as well to help us reach more people and get this information out there. Because, like John said, everybody at some point deserves to be a homeowner. And we would love to be the ones to help make that happen for you. So, catch you in a couple weeks. Thanks, everybody.